tomorrow.
All right, so let's get to sector spotlight, Scott. I wanted to highlight software and computer hardware stocks because, Oracle's reporting after the closing bell. I know you don't take stocks into the print, so you're staying away from Oracle. I'm going to see how it's going to play out tomorrow.
Yeah, I'm going to watch it, though. It's a major company coming out with their earnings report. I want to see if they actually come in line or beat a little bit. I want to see their guidance, and then I want to see how the market handles it. Does Oracle come out and meet and have normal guidance and go up? Does they come out and they disappoint, and do they give it a pass? I think last quarter they said they're going to give some of these companies a pass because of what happened with the Japanese crisis, what happened with all the weather conditions. At this point, we need to see how they really treat these companies when the report comes out, and no more passes or transient type of scenarios.
But for a long-term investor, you just want to wait and see, right? You don't want to get involved here.
If you're involved, you just had a pullback. Oracle has been one of the stronger mega caps. I think you could stay with it if you have a long term. And if you want to enter it, I would say, do it I would just say be skeptical to enter anything into earnings right now. Let's wait for something else. Let's see how it acts.
But we wanted to highlight some of the competitors to see if there's going to be a nice trade here. Let's go to SAP is the main competitor. Didn't have a very good day Wednesday, down more than 2%. Do you want to avoid this stock?
I'm going to avoid it, but I looked at the chart, and it does look as if it's acting okay. It's above some of the moving averages. If you look here, this is the 200-day, so it's holding higher. So this actually is under more accumulation. It's stronger. I think for a trade, it's going to have to get above 62 to get any type of momentum. But in this space, if you like the company and you're a believer, you could be in tier 1. But again, you have to have a long-term approach.
And then Hewlett is also a competitor, kind of going nowhere fast. The new CEO, Leo Apotheker, has been on the job for 9 months, replacing Mark Hurd. Nada is kind of what I have. Hurd was really good at cost cutting, and now we're looking for growth, and we're just not seeing it yet.
Yeah, I don't think anyone should be rushing into Hewlett-Packard. When it's very oversold, maybe you play it for a bounce, but the stock needs time. He still needs to prove himself as a CEO. Now,
IBM is one of the more promising competitors to Oracle. In my research, according to a recent Gartner report, the global enterprise software market grew by about 8.5% in 2010, and IBM was number 2 in terms of market share. How does it stack up in terms of Oracle?
IBM has been a chosen one. It's been a great performer. Over the past few years, it was one of the few to actually make highs. I think if you're going to be in something, IBM is the one. The chart looks okay. It had a
as a trader, as an investment, or both?
Both.
Okay.
I think this is one of both. I think you can get moves as a trader with the right chart pattern, and also as an investment. This has been working, and as long as it stays above all these moving averages and the composure doesn't change, I think they should stick with this one.
And I want to round it out here with Microsoft holding on to its position as the largest enterprise software company in 2010 with about 22.4% percent of market share. You want to touch this one?
You can only buy Microsoft and some of these mega caps on extreme dips. You can't pay up at all. If you take a look at Microsoft, you'll see that it's at the bottom end of the range. It's below the 200-day moving average, which I don't like to get involved in anything that's below it when the markets are above, so it's showing weakness. If it could hold higher a little bit here and prove that it's getting stronger above 2450, maybe there's a chance it clears this mini trend line and gets you a move back, but it's not going to be anything blockbuster. It's just a trade, and people have been trying to believe in Microsoft and think that it's going to be a turnaround story. The chart doesn't tell me that yet.
All right, so Scott, I'm going to take it from here because I really want to dive into Oracle to find out what to expect reporting its fiscal fourth quarter after the closing bell. Okay, so analysts are predicting earnings of 71 cents a share on revenue of about $10.75 billion. Stock has about 5 buy ratings, 3 holds, and 1 sell. And I have to say, I read through multiple analyst reports, and the sentiment here is pretty positive on Oracle. Let me go through the pros for you. It's a software company getting into hardware with its 2010 purchase of Sun Microsystems. Software spending is expected to continue to grow after the 2009 drop-off here. And analysts say, quite frankly, that Oracle is the first in a 5 to 10 year upgrade cycle. Now, Oracle is big, and it has a lot of products, which what I'm reading says that allows for deeper penetration of existing customers. It's sort of like an Apple. You rope them in, and then you make it hard for them to leave. And analyst channel checks are showing that Oracle is not losing market share, actually, but that the urgent buying from IT is actually calming down, and that's the difference that we're seeing. Expectations are that organic revenues could grow by $3 billion each year. And let me tell you the cons. Sun Microsystems will deliver synergies for Oracle, but short-term operating margins could fall because of ramped-up R&D investment. Company in general is going to be cautious about just buying stuff. We have weak jobs picture, weak economy, pricing pressure. Oracle could be forced to lower prices on their products just to keep up with the stiff and growing competition. And of course, you got to look at that currency volatility. About half of Oracle's business is actually from outside the U.S. And last but not least, you hear it a lot, soft PC sales. Now, Wells Fargo has an outperform rating on the stock and says there is a lot of negativity, a lot of hand-wringing headed into the quarter, but that Oracle tends to outperform the tech sector with solid execution and good strategy. Now, Canaccord says that Oracle could deliver a beat today, but then guide down, being pretty conservative for its first quarter fiscal year of 2012. The stock could be down as much as 3 to 5% on Friday. Now, one strategy Canaccord talks about is to sell into the print and then buy back those shares at a lower price. Oracle trades at 9.1 times EV/EBITDA, and lovers of the stock say that the cheaper catch-up plays will actually take a long time to catch up, so Oracle's worth paying up. Now, guidance is going to be key, like Scott said. First quarter estimates are for Oracle to make about 46 cents a share on revenue of $8.3 billion. It's a seasonally slow quarter, though, for tech, and there's a lot of chatter that there might be another acquisition out there in the pipeline, so be cautious of that. The stock is up almost 2% year to date. All right, we'll be right back with your stock picks for Thursday right after this.